Hi guys, Brown Asset Management here today, and today we are doing a stock review of the Coca-Cola Company, ticker symbol KO, using our 6 simple steps. Stick around to the end of the video whether I think the Coca-Cola Company is still a buy in 2021. But first, please like and comment if you enjoy the video, and subscribe if you're interested in investing in personal finance videos and more stock reviews. The Coca-Cola Company is a total beverage company offering 500 brands in more than 200 countries and territories. The beverage brands include the following clusters: sparkling soft drinks, water, enhanced water, sports drinks, juice, dairy, plant-based beverages, tea and coffee, and energy drinks. In addition, they own 4 of the world's top 5 non-alcoholic sparkling soft drink brands: Coca-Cola, Diet Coke, Fanta, and Sprite. The Coca-Cola Company's operating structure includes 4 of the following geographic groups: Europe, Middle East and Africa, Latin America, North America, and Asia Pacific. The company's reporting structure also includes the non-geographic segments of Global Ventures and Bottling Investments Group, BIG. The current market cap of Coca-Cola is $204.9 billion. The current price of Coca-Cola is $49. As you can see, at the start of March the price was up to $60, and then at lows during the pandemic of $35. It's gone up steadily since then and settled at around $49. Now let's look at the financials of Coca-Cola to see if we think it's still a buy in 2021. Firstly, the PE ratio of Coca-Cola is 25.20, so that would be a fail as it's greater than 20. As Coca-Cola's PE is 20.2, this is higher than the historical average, which is around 15, but is lower than the current average, which is around 32, but this is still a fail. Coca-Cola earnings for 2020 are released on February 10th, so these are the earnings up to the 31st December 2019. Let's look at step 2, which is the revenue increasing over the last 5 years? It's gone from 44.29 billion to 37.27 billion, so that is a fail. Now let's have a look at step 3, is the profit increasing over the last 5 years? The profit here is displayed as net income after taxes, and it's gone from 7.37 billion to 8.98 billion, so that is a pass there. Step 4 is, are the shares outstanding decreasing? We want this to be decreasing or flat. The reason for this is if you have one share in a company which has 10 shares outstanding, you own 10%. If they create 10 more shares, there are now 20 shares outstanding, and now you own 5%, so we want this decreasing or flat. The shares outstanding has gone from 4.32 billion to 4.28 billion, so that is a pass. Just before we get to step 5, can you give a like if you're enjoying the video, and please leave a comment on your thoughts on Coca-Cola in 2021. So let's continue with step 5. Are the current assets greater than the current liabilities? The total current assets are 20.41 billion, but the current liabilities are 26.97 billion, so that is a fail. Let's have a quick look at the total liabilities of the Coca-Cola Company, which are at 67.4 billion. Their current assets are around 20 billion, so they could pay off 30% of their total debt right now. Now for the final step we want to check is the free cash flow increasing. This is the cash flow from operating activities minus the capital expenditure. 5 years ago the free cash flow was 7.98 billion, and that has increased to 8.24 billion, so that is a pass. So looking at the free cash flow, we want to compare that to the current market cap of the company. So the current market cap is 205 billion divided by the free cash flow for the last year, which is 8.25 billion. That means that Coca-Cola is selling for 24 times its current free cash flow, which is a bit high. We would like that to be a little bit lower, but it is definitely within the margins of looking at this company and trying to buy it. Now we're going to look at the dividends of Coca-Cola. The current yield of the dividend is 3.33%. This is an annual dividend of $1.59. The next dividend amount will be around 41 cents a share, and the ex-dividend date is actually the 12th of March 2021. Interactive Brokers is out of date here. The payout ratio is 84%. The total cost of the dividend is 6.84 billion, and the free cash flow is 8.52 billion, so the dividend is safe. Now we'll have a look at some of the analyst ratings. The Refinitiv rating has it as a buy with 15 buying and 8 holding, with a target price of $57. The Tip Ranks rating has it as a moderate buy with 7 buying and 7 holding, with a target price of $56.29. Now to quickly summarize the 6 steps. The PE ratio was 25.20, so that is a fail. The revenue has not increased over the last 5 years. It's gone from 44.29 billion to 37.27 billion, so that is also a fail. The profit has increased over the last 5 years, gone from 7.37 billion to 8.98 billion, so that's a pass. Shares have decreased 4.32 billion to 4.28 billion, pass again. The current assets are not greater than the current liabilities, 20.41 to 26.97. And finally, the free cash flow has increased from 7.98 billion to 8.52 billion. So in terms of the 6 steps, this has passed 3 out of the 6. This is a close one, but do I think the Coca-Cola Company is a buy? I would say yes, but just. I do think it can reach its previous highs of $60. This is a very slow growing company. It's been a very slow growing stock. So if you're looking for any quick gains on this, I would say this isn't the stock for you. If you're happy to sort of put your money in here and forget about it and check it in 20 years, I think this is a great buy in that case, because Coca-Cola will always be around. It's one of the most recognizable brands in the world, but it is a slow growing stock. Now I'm just going to look at some of the technicals on the Coca-Cola Company. This is the chart for the last year, and I have the 50-day and 200-day moving averages, the 50 in blue and the 200 in grey. In late October, the 50-day moving average crossed the 200-day, which would be a bullish buy signal. But if we look to the current times, the lines are diverging, but it looks like they're coming to a point where they may cross in the future, which would be bearish. There has been support at the 50-day moving average throughout 2020, but just recently it has broke through the 50-day moving average and has hit the 200-day moving average. Let's see if there's any resistance there. So there was my stock analysis of the Coca-Cola Company, ticker symbol KO. I do think it's a buy in the long term, and even a buy in the short term, because I do think it can bounce back. But in the medium to long term, I would probably recommend staying away from the stock and look at some other avenues. But I want to thank you for watching the video. Please like if you enjoyed the video, give a comment your thoughts on Coca-Cola, and I'll see you guys in the next one.